Hey everyone, it's Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. And I guess this really isn't each and every single night for the last couple of nights because we've only had one trade for the last 3 days. And so instead of sending out one video each night with just one trade, I actually decided just to throw them all into one video tonight and go over all 3 trades for the last 3 days. So this is actually going to be a 3-night, 3-trade video that we're doing, just kind of recapping the last couple days. So Tuesday, Wednesday, and Thursday of this week, each making a different trade. So during that time period, we had a lot of working orders, but just nothing seemed to fill in this market, even though it's been moving very fast. Doesn't seem to be really active in the options market. And sometimes this happens. We get days where we enter a lot of orders. We have 10 or 12 orders or 8 orders. And some days where we have just 1 or 2. And it's just kind of the roll of the dice here with what we get in fill. So that being said, let's go over some of the closing orders first. And these are both from Tuesday and Wednesday of this week, and both very simple orders that we closed out. The first one is our vertical in Home Depot. So we had a short call spread in Home Depot, and as the market continued to sell off on Tuesday, Wednesday of this week, our Home Depot call spread obviously started to move further and further away from our strikes, the 80, 82.5 calls. So we went ahead and bought that back for a 32-cent debit. Now, in retrospect, we could have obviously bought these back for a little bit less than debit, but at the same time, we made a $19 profit on these. It was a very good trade, so it was about an $80 win on our part, and we really didn't even have these things long. I think we had them for a little over a week or so. So for the amount of capital that we put up and the time that we actually had these options invested, it was a pretty high return on our capital. Now, if we actually go to the chart of Home Depot, you'll see that 2 things really happened in Home Depot, or 1 thing really happened in Home Depot that worked in our favor. One is that the stock actually continued to move lower, right? So that really helped. And we had originally sold these things, I believe, right around this day or so when we had sold this call spread. So we were above the market at an 80 strike to begin with. So the stock moving lower really helped our position. Now, implied volatility hasn't really gone down at all since we originally entered that position. And so what does that mean? It doesn't really mean anything for our position in particular because the stock moves lower, but had implied volatility dropped, so had we seen a drop in implied volatility, then we obviously would have had a little bit more profit built up in this position. So purely what we got here is just a move in the stock, so just a directional move in the stock, and at this point we're going to take it, right? We have earnings coming up on the horizon, so earnings and the stock really jumping all over. So the next trade that and this was our HPQ calendar. So originally what we had done is we had bought a calendar spread above the market, so anticipating that HPQ or Hewlett Packard would rally. You want that front month option. Ideally, possible. The stock actually goes right towards that strike price, in our case of $35, and we get a good move up in implied volatility. So implied volatility will increase in the stock. Now for Hewlett Packard, it was just kind of floating around the 35 level as we enter the trade and continued to really move down away from that level all during May, and just really didn't make it much higher towards that 35 level threshold that we were looking at. And just the other day on the rally up in the stock, we decided to just get rid of the position with a small $10 loss. We obviously weren't going to get that type of a move up to 35. You can see it's not even on our chart on the right hand side here. That $35 price level is not even up there right now. So really it was just a shot in the dark. Implied volatility has increased just slightly since we entered the trade, but really nothing marginal enough to make a profit in this. So we decided to get rid of this position before May expiration and just take a small $10 loss on the trade. Now today's order that we actually entered, and this is Thursday, so we actually entered this order for Thursday. This is our new order, so it's our only order today for Thursday's market, and that is a big wide iron condor in the RUT, or the RUT. And this is a really good trade. I really like this trade. It's a $5 wide spread on each end. So what we did is we sold the 1140, 1145 calls. So you notice that we break out this trade alert into 2 parts. So this call spread 1140, 1145, And then down below the market, we sold the 1,955 puts. Now, the combination of selling those two spreads, we took in a credit of 140 on a $5 wide strike. So a fairly decent credit, and we were able to get a pretty good distance away from the market. Now, why were we able to do this, right? Because, again, I think we even had a comment on the membership side of our blog just the other day that asking, Kirk, do you really trade some of the major indexes? And the answer is yes, we do trade them as long as implied volatility is high enough to trade those. Now, with the RUT, you'll notice that today implied volatility is right now at the close 43 or in the 43rd percentile. This was actually above the 50th percentile today. So it actually had implied volatility that was actually quite higher today. And when we entered this spread, the Iron Condor, the Russell was trading much, much lower. It was trading down below 1090. So we actually entered it at a great time today, right before the market kind of bounced off the lows for the day and continued higher. And you'll notice we've hit this level a number of times going back, and I've kind of made the charts a little bit further back so that you guys can see this. But this level right around 1090 or so for the Russell has been hit and has been really good support going back a couple times before in the past. So I do expect the market to at least show some support here and at least some resistance in pushing through this level if we do continue lower heading into June. Now, that being said, we ended up doing the 1,000, the 1040 or the 1140 as our strikes. So if we kind of back up here a little bit, you can see that the 1,000 strike is all the way down here to the bottom right-hand corner of our screen. So that gives us a lot of room between where the market is now and our first strike on the bottom side. So obviously, we're leaving a lot more room to the bottom side. The market can always fall faster than it can rise, and we don't want to get caught with kind of our pants down here in this trade. On the top side, we have our first strike at 1140. So we're also leaving a good bit of distance between ourselves and the market should the market rally up higher. Now, obviously, if the market rallies higher, we want to see this implied volatility factor up in the top left-hand corner of your screen. We want to see that number go down, right? That's going to help us start to realize this profit a lot sooner. But doing this trade, we actually ended up doing it very, very wide, very, very good probabilities. And I'll actually go to the trade tab so you guys can see these. Again, our position is right down here below the bottom of your screen. All right, so here's the actual trades that we made, and I'll break this up into two parts. You'll see that our strikes are here on the right-hand side, and our probability of being out of the money, at least for our first strike, is about 88%. So the probability that the stock goes down to and closes outside of 1,000 is less than about 10%, or just around 10% or so. So this means that there's about an 88% chance that the RUT or the Russell closes somewhere above the 1,000 strike. So this is what that 88.5% probability of being out of the money means. It means that there's about an 88.5% chance that the Russell closes at 1,000 or above 1,000 by expiration. So we're basically trading 10% probability on this side. And then if we scroll up to the top side, you can see that when we actually enter the trade is a little bit different. But right now, this strike at 1140 is about the 78% probability of being out of the money. That means that there's a 78% chance that the Russell closes at 1140 or lower between now and expiration. So you'll notice that we're trading with almost 20% odds of losing on this trade to the top side, about 10% odds of losing on this trade to the bottom side. So you kind of throw all those numbers together. We're trading basically a 70% chance of success trade and a 30% chance of losing on this trade. So again, just to recap, if we have a 20% chance that the stock closes above this level, so 1 or 100% minus 78%, almost 20%, and about a 10% chance that it closes below 1,000. So we add those two sides together, our call side and our put side, those probabilities of losing on each side, that gives us about 30% probability of losing. And what that basically means is that we're trading 70% winning chance, right? If we've got a 30% chance of losing, we should have a 70% chance of winning on this trade. So again, I really, really like this trade for June expiration. It's already 35 days to go until expiration. That means that time decay is going to really start eating away at these positions very quickly. I do not anticipate that we'll hold this thing all the way to expiration. I'm looking to get out of this trade under $1 in credit or debit to buy back this spread. So I'm looking to take in about 40 to 45 cents or so in credit and get out of this trade before we get to expiration. So as always, hope you guys really enjoy these videos. I know that we haven't had a lot of trades go through in the last day and a half or so, but wanted to get this video out to you guys, just kind of recapping the last couple days and all these little single trades that we've had here and there. As always, if you guys have any comments or questions, please add them right below to the comment section. I'll get back to all of those tonight or tomorrow before the open, and happy trading.